Oftentimes, investors first ask themselves which stocks they should buy, but you're better off starting with figuring out if you should buy any stocks right now. History shows that the vast majority of stocks move in the same direction as the overall market, either up or down. Even the strongest leaders will have a hard time moving higher when the market is heading lower. So when the S&P 500, NASDAQ, and Dow Jones Industrial Average are in an uptrend, 75% of stocks will typically move higher. But when the market is in a downtrend, 75% of stocks are likely to head south. Think about market conditions in the same way you handle road conditions. When you have nothing but clear skies ahead, you can be more aggressive. But if the roads are icy and it's foggy outside, you need to slow down and be more cautious. To help see what the current market conditions are, check the market pulse inside IBD's The Big Picture column. Like a street light, it shows you which of the 3 possible stages the market is in right now. Green represents the market in a confirmed uptrend. This is the best time to buy fundamentally strong stocks that are breaking out of proper bases. When the market's been in a correction, it'll attempt to rally. Now, you don't want to buy on the first sign of strength. Wait for a significant gain in heavier volume than the day before. That's your sign to begin buying. Uptrend under pressure, that's the yellow light. As selling pressure begins to increase, the market's uptrend begins to stumble, but it's not quite clear at this stage if it'll bounce back into a confirmed uptrend or roll over into a downtrend or correction. Proceed with caution, and if you do make a new buy, focus on the most exceptional stocks and consider taking gains early if needed. Cut any losses quickly if the market and your stocks continue to retreat. So how can you tell when the market trend is coming under pressure and may be changing for the worse? Look for what we call distribution days. These are simply days of heavy selling where the S&P 500 and or the NASDAQ fall at least 0.2% for the day in volume that is heavier than the day before. If you get several days like that within just a few weeks, it's often a sign that mutual fund managers and other large investors are shifting into selling mode. And when you get, say, 6 or 7 distribution days within just 2 to 4 weeks, it often means the market is headed for a correction. You can see the current distribution day count in the market pulse. And the third possible stage is marketing correction, the red light. During this stage, it's best to avoid making any new buys. It doesn't mean you should immediately sell all the stocks you already own, but you do want to keep a close eye on them. And depending on your own risk tolerance, you may want to lock in some profits to protect your gains and reduce your exposure to a prolonged sell-off. While you don't want to make new buys when the market is in a correction, you definitely do want to keep building your watch list. Pay attention to stocks that have strong earnings and sales growth and are forming new chart patterns. These are the kind of stocks that tend to bolt higher as soon as a new rally begins and the outlook shifts back to market and confirmed uptrend. The bottom line is, before you make any new buys, make sure you understand the current market conditions. If you stay disciplined and only make new buys when the market is in a confirmed uptrend, you'll be keeping the odds of success squarely in your favor.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube.
If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.